Hello friends, today from the fundamental research desk we have another IPO that is coming in the retail space called specialty restaurants. Now as far as this IPO is concerned, it constitutes around 1.17 crores of equity shares, which is its maiden public issue. This 1.17 crore equity share will constitute around 25% of the post-issue share capital of the company. The issue is offered at a price band of 146 to 155, leading to raising funds, raising money from the market to the extent of 182 crores, which is at the upper end of the price band. The issue opens today, that is May 16th, and it will close on Friday, that is 18th May. We believe that analyzing the company, what we believe is that specialty restaurants is present in a fast growing and a lucrative food service segment, food service restaurant industry. It caters into the fine dining space of this particular industry, organized retail panel. Now if you look at the history, the food service industry is quite at a nascent stage as far as India is concerned. The organized penetration is as low as 10% as compared to 30, 40, 50% in some of the other countries, and it is expected to grow. This organized segment is expected to grow at a very good over 25% rate in the next few years up till 2015. This is stated by Technopack report. So we believe that the company is present in the right segment, a growing segment, or along with its presence, it has bouquet of brands in its offering. It operates through around dozen of brands. Some of the flagship brands are very good, they enjoy very good brand loyalty and brand recall, like Mainland China, which is its flagship brand. They also have O Calcutta, Sigri, Machan. These are some of the other brands. Overall, it has around 10 to 12 brands in its entire portfolio. So in this industry where the mortality rate is so very high in the hotel space or in the restaurant space, this industry has survived and has grown from mere one restaurant some 17 years back up to now 82 restaurants and confectionery. The prominent Sweet Bengal store is also under the company's aegis. So currently, if you look, it has around 69 restaurants and 13 confectionery, that is the Sweet Bengal shop. So it has grown over a period of time through its own internal accruals as well as through private equity funding. The model has been scaled up to a national level. Currently, it is present in around 21 cities, which gives us a very good comfort that the scalability is already established. This is one pointer where what we like about the business. The other thing is, when we look at the financials of the company, it's not only that the number of stores have increased. Along with number of stores, the financial performance has also improved year over year. In 2007, the company was clocking around 51 crore of revenue. In FY12, it's expected to clock 200 crore. 9-month number already gave 155, 160 crore of revenue. So its revenue has grown over fourfold in this time frame. Along with revenue, the operating profit leverage has also come into play. From a mere 14-15% kind of an operating profit, now it is earning operating profit margin of as high as 21%. The PAT has grown at 50% CAGR over the last few years, around 6 years, the numbers which we have. So overall, the financial performance has also been very robust, very good. The returns ratio are decent at over 20%. The ROC is at over 20%. The ROE is at 18%. So that also looks quite decent and stable. As a food restaurant business is concerned, working capital negative. The business is working capital negative. So apart from loans and advances, you do not have to block much money in the working capital front. It's the brand strength on which the company would be leveraging. The issue proceeds, as I said, 182 crores which the company is planning to raise, that will be utilized to expand its Mainland China brand. Now currently it has around 37 Mainland China brand. It plans to take it to 90 and 100 in next 3 years. So with the increase in the Mainland China brand, the economies of scale will come. the operating levers which are there, certain levers are yet to be explored, like rentals, employee cost, that will come into the system, and we believe the financials are likely to improve. So overall the financials are quite strong. On the valuations front, at 155, which is the upper end of the price band, at this price the stock would be trading at around 36.7 times, around 37 times its 9-month FY12 earnings, where we annualize it at that. So FY12 annualized, it will be trading at around 37 times. If you look at the absolute number, it looks like valuations are on the higher side. But a company which is growing at 35-36% CAGR on the sales, and it is growing at 50% on the profit front with operating levers still in place, we believe that the stock, we believe that the company has good potential. There are no listed players at this point in time to compare it with the industry trend, but the only remote or the closest competitor, not the competitor but the closest peer, would be Jubilant Foodworks, which is also present in the same segment of food service industry, but it has a very different business model. So when we look at that company's valuation, it is trading at around 43 to 44x its 1 year forward, that is FY13 earnings. So looking at that, when the stock is available here, if you look 1 year forward, it is trading at around 24-25 times on a rough cut FY13 numbers. So we see that at that price the stock is offered at a discount to the Jubilant Foodworks stock. So we believe it offers a good opportunity for players to cash on this huge consumption opportunity which is lying ahead. Thank you.